Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Kingboard Laminates Holdings Limited annual report. Kingboard Laminates Holdings Limited offers a diverse range of businesses and services across various sectors. At its core, the company manufactures and sells laminates to customers in China, Europe, Asia, and the United States. These laminates are made from glass epoxy and paper materials. In addition to laminates, Kingboard provides upstream component materials such as copper foils, glass yarns, and epoxy resins. The company also engages in property development, selling and renting commercial, residential, and industrial properties through its investment portfolio. Furthermore, Kingboard offers various other services including trading in copper, hotel accommodation, manufacturing and distribution of chemicals and electronic special materials, and specialty resins. This comprehensive range of businesses enables the company to maintain a strong presence in multiple markets and industries. Kingboard Laminates Holdings Limited market capitalization of $70 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Kingboard Laminates Holdings Limited holds a significant advantage in their industry. Kingboard Laminates Holdings Limited trades at a higher price-to-earnings ratio of 45 times and a higher price-to-book ratio of 4.64 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 33% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified by examining the key factors that contribute to an increase or decrease in revenue for a company. Revenue growth is primarily driven by sales of laminates and its upstream materials, specialty resin, and contracts with customers. The sustained demand growth for electronic products, rapid advancements in high-tech sectors such as artificial intelligence (AI), and increased product unit prices have also contributed to revenue growth. Additionally, strong demand for new materials driven by AI and electric/smart vehicle technologies has led to rising sales volumes and multiple price increases. On the other hand, revenue decline is primarily attributed to a decline in the properties segment, Europe, and America. The property division's decline in rental income has also contributed to the revenue decline. These factors highlight the importance of geographical and product diversification in maintaining stable revenue growth. The net income and profit margins of Laminates division experienced significant changes. Specifically, its net income increased by a substantial 70%, while its EBITDA rose by 22%. This upward trend can be attributed to the growing demand for new materials related to artificial intelligence, AI, and electric vehicle technologies. As a result, the division's business has been thriving. In contrast, there was no notable change in the overall company's net income or profit margins. However, it is worth noting that the property division saw a decline in revenue and EBITDA. This decrease can be linked to the company's strategic focus on developing its laminates business, which may have diverted resources away from other divisions. The company's financial performance indicates a significant milestone. One of the key indicators of a company's health is its ability to generate positive operating cash flow. This means that the company is able to produce more cash than it consumes in its daily operations, allowing for investments and debt repayment. According to the provided information, the company has indeed achieved this goal, as stated on page 15. This achievement is a testament to the company's efficient management of its resources and its ability to maintain a stable financial position. The company's debt level has undergone significant changes over the past year. A a notable increase was observed in the amount due within 1 year, rising by a substantial 114% from H-Cone $1,662,897 to HK3,552,115. Conversely, the amount due after 1 year experienced a decline of 61%, decreasing from H-Cone $1,615,385 to HK637,441. In addition to these changes in debt levels, interest expenses have also undergone significant fluctuations. Specifically, interest on bank borrowings decreased by $97,890 from $168,147 in 2024 to $170,257 in 2025. This reduction in interest expenses suggests that the company may be benefiting from more favorable borrowing terms or a decrease in its overall debt burden. The performance of various segments within the company has been analyzed based on the extracted summaries. On a positive note, the laminate segment showed significant improvement, with revenue increasing by $1,920,761 and results rising by $672,554 from 2024 to 2025. However, not all segments fared well. The properties segment experienced a decline in performance, with revenue dropping by 38% and EBITDA decreasing by 44%. Although the investment segment reported positive results in 2025, there was no substantial increase or decrease compared to the previous year. Furthermore, the revenue for investments actually decreased from $109,809 in 2024 to $97,265 in 2025. Management is optimistic about the company's outlook and strategy. They believe that investments in new capacity will yield stable and satisfactory long-term returns for shareholders. This suggests a focus on growth and expansion, with an emphasis on generating value for investors. The company is also positioning itself to meet emerging market demands. With high-performance laminates expected to become the norm in the electronics industry of the future, management is well prepared to capitalize on this trend. The development of high-frequency, high-speed products that meet core material requirements for high-reliability applications further underscores the company's commitment to innovation and staying ahead of the curve. Overall, management's comments convey a sense of confidence and forward-thinking, indicating that the company is poised for success in the years to come. Based on the provided information, it is clear that the company has a history of paying dividends to its shareholders. The dividend per share amounts are listed for various periods, including full-year and interim dividends. Furthermore, page 14 explicitly states that the company has paid dividends, leaving no doubt about this aspect of their financial activities. In conclusion, the company's commitment to rewarding its shareholders through dividend payments is evident from the provided documentation. This suggests a strong focus on shareholder value creation and a willingness to distribute profits back to investors. Concerns about inventory buildup or supply chain disruption have been raised due to recent trends in the company's financial performance. The cost of sales has seen a significant increase of H-Cone $146,760 from 2024 to 2025, indicating potential issues with inventory management and procurement processes. Furthermore, distribution expenses have also risen by $43,172 during the same period, suggesting that the company may be experiencing difficulties in managing its supply chain effectively. These increases in costs could be indicative of underlying problems that need to be addressed to prevent future disruptions. That concludes the financial summary for Kingboard Laminates Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.